What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to talk about the crypto market pump that's happened over the last 24 hours and whether we're about to get a dump in the next couple of days. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, to keep in mind that nothing in this video is financial advice, it's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So you guys might remember on Monday, I was basically saying that there would be a pump and then a dump. What was really funny is that, of course, in the first, let's say 24 hours after that video came out, there wasn't really much price action in the crypto market. Crypto prices were basically just chopping sideways. And I was seeing people, in the comments basically saying, oh, it looks like Dan was wrong. There's going to be no pump. It's just going to be a dump. Like always, Dan is wrong. There's no pump. Nothing is coming. And then literally just a couple hours after US markets opened yesterday, we see basically a god candle, let's say on the hourly, with Bitcoin rallying up exactly to the level that I was watching, which was somewhere around 94,000. That's the level I had specified on Monday, saying, hey, there's going to be a pump here, with Bitcoin likely rallying up to 94,000 and Ethereum likely rallying up to somewhere around 3,300, I think I said, or 3,400. I can't remember off the top of my head, but both of these targets were hit. Saw a nice little pump in Bitcoin and Ethereum. And of course, what I had mentioned in that video is that after this pump, it looks like there could be a dump. And again, guys, it's very simple. The reason why I said that there would be a pump and then why I think there could be a dump in the next day or two is because this is what we've seen before every single Fed meeting, at least over the last few months, that going into the Fed meeting, we would tend to see crypto markets rallying. And then after the Fed meeting, Bitcoin would get a 5% drop, which would take Bitcoin back down, let's say somewhere to the 89K range, which is actually where the CME gap is. You guys might have noticed that we still haven't filled that CME gap, which is currently somewhere, let's say around, 89,525, something like that. So the idea that, the Fed later today, the Fed's a little bit hawkish or something, and then we get a drop basically to fill the CME gap, that would be consistent with what we've seen going into Fed meetings and after Fed meetings, at least over the last few Fed meetings. So it really is that simple. The one thing that I should point out though, guys, is that as you can see, Bitcoin is kind of basically pushing up above this long-term resistance trend line, which previously was serving as support. It's a trend line I've been watching for a while. And on the off chance that Bitcoin does get above this trend line, it could really spike higher. And I'll kind of give the contrarian take there in just a second. But again, I guess the main thing to keep in mind is that yes, historically speaking, it does look like there is going to be a dump after the Fed meeting later today. That's just because that's what we've seen the last few times. Of course, this time could be different. And what's really interesting, and I guess to give some credence to this idea that, maybe this time is quote unquote different, that we will see a pump after the Fed meeting, has, from a purely technical perspective, you can see that we've kind of seen like a repetition of this basically, like I want to say, like, I don't know, it's like a fake out pattern or accumulation pattern or whatever you want to call it. We can see that so far this cycle, we've seen this happen twice, where prices would break down below a key support level. Everyone would get scared, think that it's over, and then whales would basically accumulate, and then we would have another massive pump higher. That's what we saw over the summer of 2024, and that's what we saw in the spring of this year. And something I think I've mentioned in previous videos is that it's possible that we're seeing kind of like a repeat of the pattern that we saw the last two times, but again, it's just happening faster. Like, that's a really fascinating thing, is back here, I think it was something like 3 months or 4 months or something, or maybe even 6 months of chop below this key support level. Then it was something closer to like 3 months. And then so it's possible that now we're approaching a period where it'll be something, let's say like a month and a half or 2 months of chop before a continuation higher. And it's possible that the Fed could be the catalyst for that. One guy, I have to give a shout out to one of the guys in the Discord named FEMAP, who's always kind of giving us a gut check and saying, hey, this analysis of like, that after Fed meetings, the prices dump, and going into Fed meetings, prices pump. This is something that everyone knows. Everyone is expecting the CME gap to be filled. And of course, as you guys know, when everyone expects something to happen, we tend to see the opposite. The kind of caveat there is that the CME gap is really a mechanical thing. It has to do with the basis trade that's being done by hedge funds. So it's not something that is necessarily sentiment driven. It's something that's more algorithmic and mechanical, which is why the CME gap basically almost always gets filled. It's just a question of when. And what I had mentioned at the start of the week is that, just because there's a CME gap doesn't mean that it's going to get filled right away. We could see a rally first and then a filling of the CME gap, for example, after the Fed meeting. And if the Fed meeting is bearish, which looks like that's potentially the scenario we're going to get here. The one thing I'm going to mention, though, of course, I'm sure you're all wondering what to expect for the Fed meeting. Of course, there's basically three things to watch. The first is the interest rate decision, which in my opinion is kind of like it's like the nothing burger, because it's already priced in. Everyone's already expecting that. So the interest rate decision isn't really going to have that big of an impact. what is going to have a bigger impact is basically any kind of comments from Jerome Powell around what they're going to do with the balance sheet. That's kind of a bigger thing to watch. I personally think that's going to be something that's bullish. However, the most important aspect will be something I think I flagged either on Monday or over the weekend, and that's that we're going to get a summary of economic projections, which is basically the Fed's forecast on what's going to happen to inflation, the economy, interest rates, all this stuff over the next few months. So this summary of economic projections, which is going to be published at the same time as the rate decision, it'll be just before Jerome's speech. This summary of economic projections is the most important thing to watch later today. And what's really interesting is you could make the argument that the reason why the last few Fed meetings were so bearish for the crypto market or for the markets in general has to do with the fact that the Fed was kind of flying blind. First it was all this stuff around tariffs. Are they going to be delayed? Are they going to be finalized? Right? All that stuff was happening over the summer. Then we had the U.S. government shut down, so the Fed didn't really have clear data. So they were just kind of cautious and cautiously hawkish, you could say. But now that the U.S. government has reopened, now that the tariffs seem to have been finalized, and not only that, but it looks like the Supreme Court is going to strike them down, you could make the argument that from a macro perspective that we're going to see something that is consistent with what I've outlined here on the chart, which is that, we're basically seeing a bottoming structure here, and that today's Fed meeting could actually be bullish, and we would see a surge higher in the total crypto market cap. And again, this is technically possible when you notice that, yes, Bitcoin is now up at this resistance level somewhere around 93K, and even Ethereum is up around this resistance level of between 3,300 and 3,400. So if the Fed does turn out to be a little bit more dovish than expected, that's probably going to be in the summary of economic projections, then we could see a spike higher. And again, I just want to put that out there just to say that, yes, historically speaking, over the last few Fed meetings, the chances of a dip coming after the Fed meeting are high, and this is especially high when you consider that we still need to fill the CME gap. However, you could make an argument that, that in contrast, what's quote unquote different this time is that, again, the Fed isn't flying blind like it was before, so the Fed can actually be a little bit more dovish. Whether they're going to do that or not, that's another question entirely. But let's just say that, objectively speaking, the chances of a downside of a 5% drop in Bitcoin and, let's say a 5 or 10% drop in altcoins, that is, statistically speaking, that's the more likely outcome later today or tomorrow. But the caveat being is that there could be some dynamics here where we actually do see a pretty sizable pump. And this is especially likely, guys, when you consider that so many people are aware of these dynamics. Everyone is short. There's so many people short because they think the CME gap is going to be hit. There's so many people short because they think that the Fed meeting is going to be bearish. And there's so many people short because they think that the cycle is over. And when you have this amount of shorts, even a slightly more dovish Fed, a Fed that's slightly more dovish than expected, that's enough to cause a short squeeze, which you could argue that's basically why we saw such a big spike yesterday. Everyone is just positioned short, everyone is bearish, and that basically sets the stage for an upside surprise, which is what we got yesterday. Although historically speaking, it's not necessarily a surprise. We did see a rally into previous Fed meetings as well. Anyways, guys, again, long story short, looks like there's probably going to be a dump later today or tomorrow as a result of the Fed meeting. That's what's suggested, again, just because that's what happened after the last few Fed meetings. But again, could this time be different? Yes, I do think that's possible. So it's not like 100% guarantee. I would personally, on my personal level, I'm not going to be trying to trade around this at all. I think the Fed meetings can be very volatile. I should probably mention before I forget that, with these Fed meetings, it's common to see lots of unwind of positioning, like shorts getting squeezed, longs getting liquidated. There's a whole bunch of volatility when Jerome goes on stage and says, good afternoon or whatever. So I don't trade around these events because they can just be so extremely volatile. We really have to wait until later today or even until tomorrow for the markets to calm down, for all that positioning to be unwound, and to get a sense of okay, are we going to see a basically dump like we saw previously after Fed meetings, or are we going to see a rally higher because the Fed was more dovish than expected and the markets have digested that? It takes roughly around a day for that to happen, for all the positioning to be unwound and everything. But anyways, guys, if you are planning on trading at the Fed meeting for whatever reason, then do check out the link down in the description, specifically this first one here, BitGet up to 50,000 USDT deposit bonus. When you click on that link, it'll take you to a page that looks like this. You guys will notice that the Coin Bureau does have a partnership with BitGet, but on a personal note, I do think that BitGet is an awesome exchange. It's one that I use personally. That does not mean that you should be keeping your crypto on BitGet or any other exchange for that matter. Always keep your crypto on your personal wallet. Only be trading with crypto that you don't mind, losing potentially if there's some crazy something that happens. But in all seriousness, BitGet is completely free to sign up and to use. They have spot trading trading, they have futures trading, they have on-chain trading, they have tokenized stocks, they have like AI trading, a whole bunch of different features. So do make an account, just check it out, see if it's right for you. And if it is, you might get enough of this trading volume here to get some of these bonuses, which again is up to 50,000 USDT deposit bonus. And if you guys did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ding that notification bell, and I'll see you in the next one.